Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products that they don't need or understand. So if you're tired of being a transaction, go ahead and hit that subscribe button and the notification bell so you never miss another video from us. How are you today, Brian?
Hey, doing great, Michelle. How about yourself?
Doing good. Thank you very much for asking. So today we are talking about 529 plans, specifically how 529 plans how a 529 plan works for college savings.
Perfect. That's a good topic.
It is. Well,
Very
especially
popular.
when all we hear about is the rising increase of, the cost of tuition is going up, the cost of books, the cost of this or supplies, whatever it is, anything that's related to education is going up. And in fact, the average, recent studies have shown the average tuition and fees, that's key, tuition and fees at private national universities have jumped up 144%.
Wow.
Ouch, right? Yeah. Out of state tuition and fees, at public universities have increased 171%.
Wow.
So it's actually, that has risen higher than private. In-state tuition.
Pretty big jump there.
It's a big jump. In-state tuition and fees at public national universities have grown the most, which is 211%.
Wow.
That's insane, right? And so the total consumer price index inflation increased around 54% from July 2001 to July 2021.
So in 20 years. Yeah, definitely. I could see that.
That's right. Yeah, absolutely. So
I can't afford to go to college today. That's why the planning is so important. So
important. Absolutely. So let's talk about the 529 plan. It is an investment vehicle that allows you, a parent, to save money tax deferred, like you can grow it tax deferred,
right,
for your child or a child's education.
Yep.
So let's briefly go through what a 529 is, and then we can talk about, we'll talk about contribution limits and all that.
That sounds good. Just like you said, though, a 529 plan is tax advantage savings plan that you can use to pay for qualified educational expenses for a they call it a designated beneficiary, meaning the child that the plan is set up for. So usually used originally just for college. But in 2017, 529 plans were expanded to include K through 12 grade education, such as private schools. I think moving forward, you're going to see that a lot more uses of the 529s towards private school tuition and also into apprenticeship programs. So that area is growing pretty rapidly.
Absolutely.
And you had mentioned that the 529 plan, it does grow tax deferred, the savings inside there. And the withdrawals are tax-free as long as they're withdrawn for qualified educational expenses.
And those are tuition and fees, the qualified educational expenses, and books and supplies, computers, internet access, room and board. And I think there's stipulations here on this one, as long as the student's enrolled at least half time. Yes. And then also student loans, there is a lifetime limit of $10,000 on that.
Right.
So
right.
I know I have a girlfriend
redefined plan of what is covered and not covered.
Exactly. I have a friend who has a child in high school, and guess what? The computer didn't work. And she's like, the computer crapped out. It's the middle of COVID. What do you do? She's like, I just have a 529 plan, pulled it right out of it.
Wow. Cool.
Yeah. Paid for it.
That's what it's designed to do.
Exactly.
Save your receipts.
So I'm sorry.
Save your receipts.
Exactly. So let's talk about the 529 plan contribution limits. What are those?
So when you open a 529 plan, there's usually a minimum contribution required. So it's pretty low. It's like $10 to $15 average. And then once the account's open, you're not required to continue contributing. So you're in control of that. So let's say right now with the savings rate and inflation going much higher, you're not as able to save as much money right now because your costs are going up. So You can set that up. You can also set up for automatic EFT drafts to
Contribution.
come out, automatic payroll deductions. There's no limit on how much you can contribute, though, to a 529 on an annual basis. But if you do make contributions above 15,000 per year annually, you're going to incur gift taxes or use some of the lifetime gift tax exclusion. So you got to be careful on that. And well, there's no annual limit. Some states have different cumulative contribution limits, anywhere from 235,000 up to 529,000.
Got it. Okay. So there are some federally, there's no, there are no contribution limits, but
Right.
state to state varies.
Just watch that limit lifetime gift tax exclusion. So
Sure. No, of course. Right. We talked about contribution limits to 529 plans.
yes.
What about the withdrawal limits?
Pretty simple.
Or
As long
rules,
as
I
you're
should
using
say.
the money in the 529 plan to cover qualified educational expenses, kind of like what was listed earlier for the
The
beneficiary.
books, the computer, internet access, tuition, etc.
So withdrawing the money should be pretty easy. You need to calculate your qualified educational expenses. Like you just said, the room and board, books, supplies, equipment, fees, college, the student loans up to $10,000 per year. Once you calculate all your cost, you, the account owner, will submit the withdrawal request to the company, right? So most 529 plans allow account owners to distribute the money directly to the school, which is kind of nice because you don't want that money coming to you. I'd rather make sure it paid the bill. Sure. Also, any costs that go beyond educational expenses that are withdrawn will need to report them on your year-end tax return, and they're subject to income tax and a 10% penalty.
The penalty, right. Okay.
So the gotchas, you always remember that.
So my next question, let's talk about what if you don't need the money that you saved? I'm assuming, I know that if you do not use the money for K through 12 and in college, anything having to do with education, you can withdraw the money, but you're going to pay subject to income tax, and you're going to pay that 10% penalty.
Yeah.
Are there any other exclusions or clauses? What if you don't need it? For example, what if your child has a full scholarship?
Well, and see, here's one of the benefits of the 529 plan. One option you got is you can change who receives the money.
So a younger sibling or someone else.
Yeah. So it allows you to counter to change the beneficiaries that the funds would be used for. For example, you can change the beneficiary to a sibling or another family member. And then, like you had already mentioned, if you don't need the money and don't want it any longer, you can withdraw it and pay the penalty. So,
And
also, don't forget,
what about scholarship exemption? There's an exemption for that as well, right?
Yes. If your child receives a scholarship, you still have to pay income taxes on the earnings, but you won't be penalized on the additional 10%. So
okay, got it.
Simple.
Yeah, absolutely. If you have a child, no matter, I guess, whatever age, it doesn't matter at this point, start saving now. 529 plans are really the way to go. If you can start saving now and you have a young child, just imagine it's growing tax deferred.
Sure.
Save a ton. All right. Well, thanks so much, Brian, for this. And thank you everybody for watching. If you like this content, please give us the hit the like button and subscribe to the channel so you never miss another video from us.
Thanks, everyone. Great job, Michelle. Talk to you soon.
Bye-bye.